All right, we're recording. Welcome back to session 5 of the Nonprofit Management Institute. Today we'll be covering financial management and fundraising. And I will kick it off to you, Lisa, to continue with introductions.
Great. Thank you so much. So hope everyone's enjoying this night. Well, it's very cool here in Raleigh, North Carolina. So hopefully those of you who like to wake up to the nice brisk air, I know I do. So welcome to day 5, as Rebecca has just mentioned, another full packed day of information on financial management and fundraising. So thank you. So not to be amiss, but just want to make sure we continuously thank our sponsors, to whom this would not be able without their support. So Triangle Community Foundation, Guilford Nonprofit Consortium, and Duke Continuing Studies. And then again, as a reminder, for those of you that are interested in the Duke Continuing credits, please make sure that you reach out to Rebecca for that information on how to do that. And she'll go over that again, probably during graduation or our next session, and to remind you guys on how to do that. Next slide, please. So here's our agenda. Our packed full agenda. As usual, you all can read, you can see what's up there. We're going to make sure our breaks are evenly distributed throughout the session today. Again, we're pretty good at filling out the crowd in terms of when that break will be needed. We will have a guest speaker with us today that I'll introduce, Tracy Carriette, and I'll talk a little bit more about her later on when we get to that point. But I hope you guys have your 5 cups of coffee in front of you and are ready to go. Dr. Palmer.
Good morning. Good morning, everyone. Lisa said 5 cups. I'm still on the first one, but I typically have 2. So get ready. That's all I can say. Well, I'm hoping that we are all kind of ready to jump into our 5th and 6th topic, actually, because we are discussing in areas of financial management and fundraising today. But before we jump into our new material, we do want to spend a little bit of time doing somewhat of a review and just and a reflection. And so you should have received, as always, you should have received wraparound information. So I'm hoping that everyone was able to get that. Is there anyone who wasn't able to receive your the information that you have that we sent out? Okay, I don't see any folks who did not. Is that okay? So what we want to do is we want to do somewhat of a review, and we want to take a look in particular at the SWOT analysis information that is in your workbook, pages 93 through 95. One of the things that we want to, just point out is that we typically do the SWOT analysis in a retreat space, oftentimes when we're working through strategic planning, working through the process. And so the SWOT analysis oftentimes is generated from the perspective of looking at what the strengths, weaknesses, opportunities, and threats are as it relates to accomplishing the goals that we are trying to pursue in the plan. And so what we provided to kind of add on to that is we provided a sample goal with a set of action steps and an outcome statement, and which was a program goal. And then we also provided a sample nonprofit goal. So in other words, an organizational goal. We provided an example of that, and that also has action steps and an outcome that goes along with that, so that you would have that in your library to reference. I was about to say those are my favorite examples, but I would just say Leslie and I spent time developing those specifically when we received questions about, well, what is the difference of having a goal that's specifically related to programs versus having a goal that's specifically related to the operations of a nonprofit. And so hopefully those examples were helpful. So I'm going to pause there. And if we could go to the gallery view, I just want to kind of hear from us. We know that that was quite a bit of information that we shared last week, but hopefully it adds to your library or starts a library for you in terms of the fundamentals of nonprofit management. So I'm going to just pause here and just kind of ask, are there any questions related to the SWOT analysis or writing a program goal or writing a nonprofit goal? And also, just as a point of reference, when we queried the group about, what we might need to reflect on, the SWOT analysis kind of bubbled up. I know it was several weeks ago now when we did the capacity assessment, and those results kind of showed us that the SWOT analysis was an area that folks wanted to enhance their capacity around, and also writing goals. So are there any questions about that now that we've covered that as we move into the, so Carrie, I see your hand.
Thank you. And you may have covered this in the last one, and you give us so much beautiful information. I missed this one.
No worries.
So I'm trying to figure out the order at which this is presented. Like what, like I have staff, I have volunteers, and I have board, right? So who do I start with?
So typically the strategic planning process is led by the board and the executive director, typically the entire process. And typically we suggest that at the onset that there is a strategic planning committee. And on that committee, you would have representation of those key stakeholders that you choose. And we kind of gave you a list of potential stakeholders that you could use. And so then that's kind of the grounding of or the foundation in which we kind of launch the whole process. So to your question about volunteers versus staff versus board, typically what happens is that we start with in the process, we start with gathering information from key stakeholders about where should we go? What should our vision be? If we're going to do a strategic plan, what should be the areas of focus in that plan over the next 2 years, 3 years, what have you? And so once we do that, that gives us a focal points to then begin to have conversation, discussion, focus group, retreat with the board. It typically starts there. And in that retreat, we present that feedback from the needs assessment, the asset mapping, and all of that. We present that feedback to the board, and then the board then suggests some areas of focus based on that data, based on that information. And once you have that, then you have something to do a SWOT analysis on. So you have those areas of focus, you have you generate what those goals are going to be from the areas of focus, and you do your SWOT analysis there. So you would start with the board. Now, in some cases, that retreat includes the board and the staff. In some cases, you have them both together. So they would receive and they would get that information, and or they would work through the SWOT analysis together. Now, I don't typically see the SWOT analysis conducted with volunteers. I don't typically see that unless the nonprofit is volunteer led. Then that means everybody is pretty much a volunteer. So the volunteer component would be facilitated pretty much the same. You could decide if you wanted the volunteers with the staff, if you wanted the volunteer staff and board together, you could just decide how you would want to do it. But the first group that focuses on the SWOT, or the first group of stakeholders, is your board and the executive director.
Thank you. That was
I
helpful.
know that was a, whew,
No,
I
that
had
was
to get-
helpful. It was, yeah.
I had to get all the way to that. But and some, Carrie, some consultants do that differently. I typically do it where we do the SWOT on the goals, because that makes more practical sense
Mhm.
to me. That if we're going to have 5 goals, then we should do a SWOT for each one, so that we have a really good idea. Do we have the capacity? What are our strengths? What threats are there? What barriers are there to actually implementing those goals? And that oftentimes comes out in the retreat.
Okay. Thank you. That was helpful.
Any other questions related to strategic planning? Do y'all, there's anybody, we're all good. We can all go out and do strategic planning. That's great. I think that's wonderful.
So can I just say one more thing, Dr. Baldwin?
Sure.
I was gonna say this sort of later, but I think this kind of all connects. So when we were back a few weeks ago and talking about our board, and I posed a question about the executive director being on the board and being the president, and you let me know right quick that was not appropriate and that I needed to handle that. I put a lot of thought into that, and I had a very long conversation with someone on my board about the fact that I needed to fix that. Of course, she knows who you are and thinks that you're the greatest thing ever. I'm like, yes, she is. Anyway, she said, well, this weekend I'm going away on a retreat because the other board I'm on, we're spending the whole weekend doing strategic planning. And I was like, see, I knew I picked the right person.
There you go.
Yes. So
Yes.
we're going to spend the next year working together to get her to a place where she feels comfortable. But because we had this meeting with you last week about strategic planning, that made it possible for her and I to have some really good conversations about what it would look like if she became the president of our board next year.
Mm-hmm. Awesome. I think that's great. And that, oftentimes in the work that we do, what we do sometimes emerges out of, or the how we do it emerges out of just getting an understanding of the what, right? So, and I know that in this space and in this institute, we're covering a lot of information, and we, for some of us, it's like, well, where do I start and how do I, and I wish I could tell you that there was just this one way that you go about doing this. And Carrie, your example is a really good one in terms of how the work that we do around capacity building, sometimes it is just organic, right? It's just, it surfaces out of, as we learn more, as we become more knowledgeable, as we gain more skills, then we begin to adjust how we do what we do, or identify, right, a way forward that might be different than where we started. And so I hope, and I make that this statement in these comments in the context of, let's not be too hard on ourselves and thinking that we've got to have all of this figured out, by the end of this institute, because that's not realistic. So we just have to just kind of identify, as we learn more and things start to surface, then we can insert what we've learned and try to do capacity building in a way that blends, or that kind of interfaces with what it is that we're already doing. The idea is not to create more work, but is to help to enhance the way in which we do our work. So, but that's a real good example of of that, and having that information helps you to make those kinds of decisions and judgment calls around, oh, okay, great. This person might very well be the person to help us do this particular task. I didn't want to stay there too long, but I do want to make sure that I acknowledge the fact that we have to take it one step at a time and really be realistic about what we can do and what's feasible for us to do, depending upon where we are in our development as a nonprofit. Any questions about strategic planning? We have some kind of trending information that we want to share with you. And I do see some activity in the chat. So do I need to stop talking and and read what's in there?
Well,
There's-
Deborah, yeah, go ahead.
Go ahead.
Go ahead, Rebecca.
Go ahead, Lisa. Okay. There was a question from Deborah. She was asking what's the best way to find someone to lead strategic planning. They had someone lined up, but his health made him step away.
Oh, wow. I'm going to defer to the team on that. I know that there are resources that the NC Center promotes. So I'll let Rebecca or Lisa chime in on that.
Sure, I can fill in quickly. There's a couple of different things in our Information Central for those of you that are members. There's one of them in particular I just pulled up is the Nonprofit Leaders Guide to Hiring and Engaging Consultants. There are some sample consultant templates that you can use to request RFPs and how that process can go if you're going to go that route. Oftentimes, you'll need to present some options to the board and have them determine which way they think is the best way forward and vet out consultants that way. Really, honestly, sometimes the best is through word of mouth, just other organizations that you partner with that if they've gone through a strategic planning process, asking them who they used, if they would use them again. The center doesn't vet consultants. We do have a business finder, which members and non-members can access to find consultants that work with nonprofits and specialize in working with nonprofits. And then the other resource I'll mention quickly is Idealist, which is a great resource of a directory of different consultants. It's free to sign up as a nonprofit member, and you can read bios for different consultants and reach out to them through that portal. So I'll go ahead and I'll put that link for Idealist here in the chat so everyone can check that out. It's a great resource. We refer people to that a lot.
Okay. Was there anything else in the chat other than Deborah's question? That was it. Okay. All right. Okay. So Rebecca, I'm going to turn it back over to you. We did want to share with you when we worked through the strategic planning process, we looked at our goals and developed them from the perspective of the goals being a SMART goal. And that's a pretty common way of looking at goals. But we also know that there has been some additions, right, to that framework. And so there what are called SMARTY goals. I know, right? And SMARTER goals. Yeah, I know. So I'm going to let Rebecca kind of highlight these two additional ways of crafting our goals.
Thanks, Dr. Palmer. Yeah, so you probably have heard of SMART goals: specific, measurable, attainable, or ambitious, depending upon what word you use there, relevant and time-bound. The SMARTY one that's sort of a riff on that includes I and E for inclusive and equitable. And so we've given an example of an equity forward approach here to a certain goal. It's more work. I'm not going to lie, it is more work, but it's the right kind of work because it actually leads you to a greater result. It gets you where you need to be in a way that's both inclusive and equitable. So does somebody want to read these out loud? The SMART goal versus the SMARTY goal? You can just unmute yourself and read that for us.
I'll read it. SMARTY goals: specific, measurable, attainable, ambitious, relevant, time-bound, inclusive, and equitable. Example of an equity-forward approach to goal setting. SMART goal: expand youth mentorship program into 3 new counties by the end of June. SMART goal, expand youth mentorship program into 3 new counties by the end of June with volunteer task forces that are representative of the community by age, gender, race, and other characteristics, advising the expansion.
That's great. Thanks, Charmaine. So this equitable goals look at how they typically include an element of fairness or justice, and they seek to address some sort of systemic injustice, inequity, or oppression that we're all sort of in this soup, right? In this system that we live in. And so it looks at how we can address those through goal setting. Another option that we found was smarter goals. And we provided a slide here for you. We'll go to the next one. It's got the traditional elements of SMART, but it adds evaluate and then as well as recognize and reward. So the idea being that your goals are going to constantly be evolving and changing. You're going to be looking for progress. You're going to be looking for where do we need to pivot? Where do we need to sort of update our understanding of this goal as it relates to reality in the environment in which we're working. And then also the aspect of also acknowledging where you've had success, celebrating those wins, and also rewarding those folks and raising them up, the folks that are helping to attain those goals. So some combination of these modified SMART goals is where we're headed. And I hope that you all have come across these, you stumbled across them, you'll consider how these can have an impact within your organization, and also as it relates to your mission, and as we all work together to kind of infuse EDI throughout our goals as organizations. So thanks for all that. I'll go ahead and put this, we have a source here for a guide to create and track goals. I'll put that in here as well. And I'm going to pass it back to you, I believe, Dr. Palmer.
All right. So if we could go back to the gallery just real quick, and then we'll come back to the slide. I just kind of want to get a good look at everybody. It is sometimes it's hard for me to see, but in terms of just thinking about what Rebecca shared with us, have any of you heard of the SMART or the SMARTer goals? Reaction. Pamela saying yes, Pamela, yeah, no. Okay, all right. So, this is, I think with the climate being that we are focusing quite a bit of our attention on EDI work or DEI work, depending upon how you arrange those in terms of diversity, equity, and inclusion, the SMART goal may be an approach that you want to take in terms of just kind of thinking about writing the goals for your strategic plan. And if you recall, when we studied strategic planning last week, we also took a look at evaluation. So when you, depending upon the framework you use, whether it's SMART, SMART-T, or SMARTer, also begin to think about the metrics associated with those goals. So how will you measure this is very, very important. And I think it just kind of bears repeating when you think about the SMART-T goal, incorporating inclusion and incorporating equity, that may be very well the route you want to take. And for some of us who've been kind of at this strategic planning for a while, that based on kind of where we are with what our focus is in a lot of our nonprofits with DEI, that particular framework may very well be one that will be very, very useful for you. And then in terms of thinking about the SMARTer goals, in terms of just kind of that evaluation and the kind of recognition and reward, that element of putting it together. Now, these are frameworks, right? And so that means we can adjust them if we want to. for our nonprofit. And when you go into that meeting or that work session is what I call it, when you go into the work session to identify what the focus areas are going to be, i.e. what the goals are going to be in your plan, this is a tool to help you to be able to shape in that space, to be able to shape the dialogue that either your board, your staff, or whatever combination it is that you use. This will help kind of shape that dialogue and the work that you do in that space. So that's something I just wanted to point out. And thank you, Rebecca, for doing the research on that and sharing that with us. So today, our topic is twofold. We will be focusing on financial management and fundraising. And while last week we had quite a few components of what we were working on that were related, that was kind of hands-on, we did quite a bit of that. Today we're going to do some hands-on work, but it's going to be more of sharing what these fundamentals are related to the two topics, and then just kind of helping us to understand how to utilize the information that we acquire from a financial standpoint. And then when we look at fundraising, we're looking heavily on how do we begin to develop a donor base, because fundraising happens by way of reaching out to current donors and or prospective donors. And so that's going to be kind of the focus. We are going to be moving swiftly in the sense of kind of moving through our information. So we're going to have a cadence that is kind of moving, not like a locomotive, but really moving through our information. So I just want to kind of let us know that up front. So if you take a break or you have to step away for something, that's by all means, that's fine. But just know that the cadence is going to be quicker today than it has been in the other sessions. And so I don't want you to kind of step away and come back and go, oh my gosh, where are we? What are we doing? You know, that kind of thing. But just so you know that that's going to be kind of the way in which we do this. So again, our topics today are financial management and fundraising. And we are going to be really kind of studying what a lot of the documentation and protocol is around financial management. Fundraising, we're going to spend quite a bit of time on having a donor base and setting up a donor base and all of that kind of stuff. So the first thing we're going to do is we're going to go into a breakout session. And in going into the breakout session, we want you to take a look at this image, and team, we can go back to the slide. So in your breakout sessions, and there's probably going to be several, if we could, I think we're setting them up where we have 3 or 4 people in each one. So in the breakout session, what we want you to do is we want you to answer this question. And the question is, how does this image represent a nonprofit with a diversified revenue stream? How does this image represent a nonprofit with a diversified revenue stream? And so one of the primary goals of and working in the management function of financial management and fundraising and fund development is to diversify our revenue stream. And what we want to reach is we want to reach greater sustainability. And we want to look at fundraising and financial management as working hand in hand or in tandem. So it's very challenging for a nonprofit when we separate fundraising and fund development from financial management. And so the entities that are working on these areas in our nonprofit organizations should be working hand in hand. The financial management folks should know what's happening on the fund development and fundraising side. And we should all be paying attention to the budget, right? So you're going to go into breakouts. And again, the question is, how does this image represent a nonprofit with a diversified revenue stream? And so I'm going to pass it over to Rebecca.
Thanks, Dr. Palmer. So I have you all in your groups. I put a link in the chat. If you go ahead and click on that right now and pull up the report on your screen, it's going to be page 3 of that report there from YWCA, their 2018 impact report. You'll need to have that up on your screen to refer to, because you won't be able to see this screen that we have pulled up in the gallery, the main gallery. I'll add this link to the breakout chat so you have it. And then I'll also put the question in there as well. And we'll be back in about 10 minutes. Let's go ahead and assign a couple people. And there we go.
All right. So just kind of as a debrief, after spending some time looking at that image, what are your thoughts? And if I could hear from maybe two groups, and please put comments in the chat, because we can read through those fairly quickly. In terms of, so the question was, how does this image represent a nonprofit with a diversified revenue stream?
We had one question about the pie chart. Under it said programs. Was did that with programs would be grants? Would that be grants coming in, or?
Correct. It could be grants, but it could also be that those programs have fee for services. You know, so sometimes programs will have a nominal fee, but it could be that breakdown. And when you look at the full annual report, that's what this was pulled from. There should be some indication of what that was. But yeah, it could be both.
We thought that it was a really good chart for both, like, you know, the public or funders to look at, but also to be circulated among staff to show exactly how much comes in from what funding source. That would be good information for staff to have.
Okay. All right.
I think when we look at it as well, we were a little, I thought it was well-rounded, but we were also discussing, we probably discussed United Way the most of, you know, it's 27%. And if United Way doesn't make their goal, then all of a sudden, if you lose from 27 down to 17 or down to 15%, or suddenly United Way doesn't fund you at all. You're looking at trying to find over a quarter of your budget. So sometimes that kind of, it's nice to see all of this broken out. But we had a kind of a discussion about that of, it's not just you being able to fund, it's relying on others.
Absolutely. And Kim, that's a very good segue into kind of where we are and why we share this image. Because when we work in the financial management area of our nonprofit agencies, and we're working in fundraising and fund development, we're we want to move towards trying to diversify our revenue stream. And at a glance, when you look at this, and I think I saw this in the chat as well, at a glance, when you look at this, you think, oh, wow, there's 1, 2, 3, 4, 5, 6, 7, 8, 9 revenue streams. This is good. But then if you study it a little closer, you'll see that, yes, United Way does provide a significant amount of resources or funds for this particular organization. And if you keep looking, you'll see that there are other funding streams that are grant driven. So you have probably half of the items in this diversification that are grant oriented. But when you look at what's the individual, what's the percentage for the individual giving? What is that amount?
17%.
Yes.
17%.
Yeah.
So, and we know that from a fundraising perspective is that we want the majority of our dollars coming in to come unrestricted. I mean, that's the preference. And so an area of work for this particular scenario would be, let's up our donor giving and let's try to kind of minimize some of these other streams that we have. I don't want to move away from this too quickly, but unless there's another comment or another thought about this, we're going to move into our financial management work. All right. So again, when we are looking at financial management for our nonprofit agencies, it's important for us to pay attention to what the picture looks like or what the portfolio looks like. It's very important for us to do that. And we start here because this is the goal. You know, the goal is to diversify where our dollars are coming from. And so without further ado, we're going to jump right into our financial management work. Lisa, I'm going to turn it over to you to introduce our guest.
Sure, no
For this
problem.
topic.
Exciting. So like I mentioned earlier, we have a guest speaker with us, our very own center's own Tracy Carriette, who's our Chief Financial Officer. Tracy is responsible for the overall financial operations of the center, as well as audit and tax functions, budgeting, policies, procedures, and human resources. She began working at the center as an intern while attending Meredith College, where she received a BA in mathematics with a minor in accounting. She's certainly a 20-plus veteran of the center, has more than 15 years experience in nonprofit accounting and human resource management. And previously, she worked as a staff accountant with a CPA firm specializing in nonprofit accounting, financial consulting. And she currently serves on the not-for-profit committee of the North Carolina Association of CPAs. So a wealth of information coming from Tracy. So Tracy would like to take us on to financial management.
All right. So
Or Dr. P.
Yeah. So
Sorry.
we're working together today, Tracy and I. So we will we're going to jump right in. So we're going to focus on 3 topics as it relates to financial management. I don't know, Tracy, did you want to say hello before I give the highlight of what we're doing?
Just say good morning, everyone. I'm looking forward to being here with you all today and sort of tag teaming with Dr. Palmer. Like she said, there's so much information, so we're going to move quickly, but you know, it'll be good. It'll be fun.
All right, so we're going to focus on 3 areas. You should have received from us a document titled Financial Management Handouts. You should have received from us a document titled Financial Management Handouts. And so we're going to be referring, there are several links. No, there's a lot of links in that document. And we're going to be using the share screen feature today quite a bit, just kind of showing you and talking you through what we have framed around financial transactions, internal controls and audit, and diversification of revenue. And so in your packet, you have, like I said, a document, and it is titled Financial Management Handouts, and it has some links there for you to reference. We want to begin with focusing on financial transactions. And so with that, we're going to be looking at, so you can go ahead and tee up the link that you have there as it relates to financial statements. You have a link there, and it's the one of the I can't remember if it's number 1 or 2 on that handout list, but it's financial statements. It's statement of financial position, statement of activity, statement of cash flows, statement of functional expenses. We're going to get there in just a minute. Rebecca or Leslie, I'm going to have you just kind of help people to locate where those links are. I know it's in the document that was sent to you as a part of your material. So it's a separate document. Is that in the workbook? It would have come as a separate document. I don't want to move too quickly before everybody gets it.
Part of the workbook, but we'll also be pulling it up while we're discussing it, if you don't want to pull it up right now.
Okay, great. So if you look, is it page 104? I had to grab my workbook, y'all. I've separated all my stuff and pulled it apart. So it's 103. Okay. So the financial statements, and you'll see there, it says statement of financial position, statement of activities, statement of cash flows, statement of functional expenses, and then you'll see a link there. You can click on that link. For those of you who have printers right beside you, you may want to print the pages, and those pages are 5 through 10. So take me back to the gallery team, and then I just want to see if there's anyone who cannot. Yeah, I just want to see, give everybody time?
Is
to
it the big brother, big sister thing?
It is. Mhm.
Okay.
Yep, it's one report, and all of those statements are in that's an audit report. Tracy, I'm gonna let you chime in if you want, because I can see, yeah, what that is. Yeah.
Yeah, so we're going to be looking at audited financials from Big Brothers Big Sisters today, which includes those 4 statements that Dr. Palmer just mentioned to you all. So Leslie is also going to have them up on the screen, like she said, and we're just going to walk through each of those and what they're about, what their purpose is, and just highlights from each of those. They're all important statements for nonprofit financials.
Great, thank you. And I'm going to take 60 seconds, team, just to let our group get to that information.
So pages 5 through 10.
It should start with statement of financial position. Okay.
You okay, sis? I'm fine. What's wrong?
Are we good? Julie, I see you, Julie McKnight. Are you good? I see, okay, good. I see you leaning in, so I just want to make sure. We don't want to leave anybody behind. We want to make sure we're all together. Are we good? All right. Carrie just gave me a little bit of eye contact. That's good. Thank you, thank you. All right. Okay, and team, I don't want to move too quickly beyond the polls. So do we want to do that first, or do you want me to just jump right into the guidelines and the policies?
I can share my
Okay.
screen and show that.
Thank you, Rebecca.
Sure. All right, let's give you this one. All right, so we posed the question of to you all of what financial management practices does your organization implement. We gave some various responses that you could click or select. it looks like it was a good spread, but most folks said that they use budgeting and financial reporting. No surprises there, right? That's probably foundational. And then also this financial accountability and transparency was another one that about 16% of you clicked. And then after that, we had diversification of funding sources, which is good to see because we were just talking about that. We didn't have any additional practices mentioned here. So if you have some that you thought of that you don't see here, feel free to add those to the chat, and then we'll get rolling. So I'll leave this up for just 20 more seconds. If anybody reviewing these has any ideas of something that's not on here that you use as a financial management practice.
Okay, thank you. So to just kind of kick us off, in terms of thinking about guidelines and policies, and Lisa, feel free to jump in here at any point. Just kind of go for it. One of the things that we wanted to focus on is the guidelines, policies, and the duties and responsibilities of board and staff, of board members and staff. And so a good place to start as it relates to what the guidelines are or what your policies are is to go to the bylaws of your nonprofit and to look through it to highlight specifically those laws, right? Those bylaws or articles that instruct us on how to handle the finances of our nonprofit. Specifically, there are going to be instructions in there related to the board and the treasurer of the board and how that should be handled or managed. In some bylaws, what I'm seeing and I'm encouraging is when bylaws are written, we should also have a description of the executive director's role and what that executive director's responsibilities and duties are in general. Or president and CEO, whatever the title is, that should be highlighted in the bylaws as well. And so, and that's where the guidelines and the policies begin. There are some nonprofits that have a separate document that they maintain that gives specific instructions on some particulars in terms of how the finances are managed. So for example, there are practices around, from an audit perspective, there are practices related to who opens the mail, right? Who signs checks, how many signatures are required on a check. All of those things are customized for your nonprofit in particular. I do think it's a good idea if you don't have a separate document that lays out those particulars, that you start crafting one. And I'm just saying a Word document titled Financial Management Policies and Guidelines, and just start generating a list so that that can be shared with individuals who are responsible for any aspect of the finances as it relates to your nonprofit. That includes the fundraising and the fund development and all of that. So we first say refer to your bylaws, and typically there is a finance committee that is also an element of the board of directors, and there are oftentimes instructions there as well. Tracy, I'm going to let you kind of share there, and Lisa, feel free to pick up after that with any specific kind of practices that come to mind for you.
Yeah, I think you hit all the major points there, Dr. Palmer, and some examples of what some of these policies can be. The only thing I'll add is that these policies and guidelines, help clarify the roles, the authority, and the responsibility for the essential financial management activities and decisions within the organization. And as Dr. Palmer said, you can create a really simple Word document with a list of these, and then you can add to it as you go. And then before you know it, you've got a full, policy, financial management policy around how you do things within the organization. Yeah, Dr. Palmer, you're muted. Sorry.
Sorry, I was saying, Lisa, did you have any
Oh.
specific ones? I'm so sorry. Talking away.
No, I think only comment. I think you guys both have hit it. And from my experience of working, in a nonprofit number of years that I had to make sure that you're reading, not only if you're a grant funded organization, a lot of times the grants themselves will ask you to have specific things in your policy. So make sure you're reading the grant requirement. But one of the things mistake I think I made, I did that, but then I said, well, the grant says X, Y, and Z, but then when we came to get audited, they asked, well, what did your operation manual say specifically? Because you need to follow whatever you've written in your policies. They want you to follow that specifically. So make sure that you're talking to your grant managers as well to make sure that if you're supposed to have which policies are they going to come and audit you for, and what are they going to be looking at in terms of your your operations manual, in terms of whatever you have in there, follow it, as opposed to just following what the grant is asking for. That was my only 2 cents to that.
All right, thank you. And so the way that we're going to approach this is we are going to use an audit from an actual nonprofit agency. And what you will find, in more specifically your own nonprofits, this information is posted to websites. So it's open to the public. You can go and look at all types of nonprofits, and if they've posted their audits and their 990s and their financial statements, you can review those. So we've selected this particular example, and what Tracy and I are going to do is just kind of walk you through these statements and these documents. And so if we would go ahead and pull up the audit. Now, I say that these documents are in the audit, but these documents can also be generated from your financial management platform that you use. Many nonprofits use QuickBooks. And so you can generate a financial position document. You can generate a P&L. You can generate a balance sheet. You can generate each of these documents utilizing the platform that you have, that you've purchased, or that you actually use. I don't know, Tracy, if you want to talk about the platforms at all in terms of
Yeah,
what they might
I mean,
use.
I just think that's a good point. And you're right, a lot of nonprofits use QuickBooks, and it is pretty user friendly. And you literally can create some of these reports with a click of a button, even ones that will compare, the previous year by dollar or percent change, which you'll see in a lot of these reports that they include previous year for comparison purposes. So take advantage of the fact that whatever accounting system you're using can probably produce these for you on a regular basis, so that you're looking at them throughout the year, and not just at year end, whether you have an audit or some kind of year end closeout process.
So thank you. And we are going to come back to that budget. I did see that there, but we had everybody teed up for this, so I just went straight to this. So the first, we're going to look at 4 statements. Okay. This is a report that is completed after an audit. And if you look at this table of contents, you will see those 4 statements that we're going to be referencing here. So we're going to start with the first one, the statements of financial position. And Tracy, I'm going to just pass it over to you, if that's good.
Yeah.
All right. So
So Leslie, you can go ahead and scroll, keep scrolling through that document. All right, here we go. So this is the statement of financial position. You may have heard it referred to as the balance sheet for an organization. It's the same thing. And this statement is going to show you assets. So it's what the organization owns. Liabilities, what the organization owes, and then net assets, which is the equity. So staying right here, looking at the asset part. And again, I mentioned a few minutes ago, and Dr. Palmer did as well, that you can see we've got 2 years worth of information here, so that again, you can look at year over year comparisons. So I just want to point that out. But looking at the assets, some examples of current assets where it says cash and cash equivalents. That's going to be essentially what a nonprofit has in their bank account. And then you have grants receivable. So those are any grants that have been awarded to the organization that is still owed to the organization. So you haven't received those yet. Prepaid expenses is another asset. That's something that you're paying in advance. So an example of that for the center is around health insurance premiums that we pay for our employees. So you have to pay those a month in advance. So that would be an example of a prepaid expense that you'd normally see showing up at year end. And then other assets can include property and equipment, investments, things of that nature. So if you scroll down to the second part of this statement, or this is actually broken out on a separate second page, which is fine. This part details the liabilities and net assets of the organization. So you can see some of the current liabilities there are examples of capital lease obligations, which could be if your organization is renting a copier. There's a obligation and a value associated with that. Accounts payables are all the what you owe to various vendors that you work with. Deferred revenue. So what that means is that you've collected money for a program or a service that happens in the future. So likely in a different fiscal year than the current year that you're reporting on. And then you've got long-term liabilities, which is going to be loans, for example. If any of you, this doesn't have it, but an example is if any of you received those PPP loans, your organization from a couple of years ago, they would show up here as a long-term liability until hopefully they were forgiven for your organization. So that's an example of long-term liabilities. And then when you look at the net assets section, so net assets is what's left over if you sold all your assets and you paid all your debts and liabilities. So net assets is total assets minus total liabilities. And then net assets are split into without donor restrictions and with donor restrictions. And that's just important to understand any specific purposes that are placed on any of the funds. And we're going to talk about that a little bit more on another statement that we'll be looking at. But basically, this report is defining the net assets that you have available to conduct operations of the organization. So I'll pause if there are questions or if there's anything that Dr. Palmer or anyone else wants to add before we scroll into the next statement.
I don't have anything to add, Tracy.
Okay. Well, we'll keep moving again in the spirit of the information that we have to go through. So Leslie, I think that you can keep scrolling and we'll get to the statement of activities. Yep. So this is the statement of activities for this organization. This you may have heard referred to as well as the profit and loss or the income statement. So the purpose of this statement is to provide detailed information about the organization's transactions and how those activities help further the organization's mission through various initiatives and programs. So it's going to show you revenue and expense over time. It's the cash that's coming in and the cash that's going out. In the simple way of thinking about it. And you can see here that it's categorizing revenue, both revenue and expense on this statement by type. So if you look at the revenue line items, for example, first of all, these are going to tie closely back to the budget for your organization. And it just helps to allow you to make sure that you're on track or how you've done throughout the year compared to the budget. Again, the year-over-year comparisons, just as another informative piece of information about the organization. And then you can see the columns here. So again, it's separating this revenue into without donor restrictions and with donor restrictions. And restricted revenue just means that it needs to be used for a specific purpose or program or period of time. So anything that would have a restriction for a specific program is going to show up under the column with donor restrictions. The funds or revenue showing up under without donor restrictions is more along the lines of the general operating support that Dr. Palmer mentioned earlier. And then if you scroll down a little bit, Leslie, just to make sure everyone can see the page here, the expenses do also tie back to the budget, but you can see here they're broken down a little differently, not necessarily by line item, but they're broken down by program or support service area. So that we can see what's actually being used for programs, and then what's being used for sort of that management in general or fundraising expenses of the organization. And then at the bottom with the changes in net assets, those are your expenses subtracted from your revenue. It's like your bottom line. So basically, it's showing you if you have enough revenue to cover the expenses for the organization. So anything about the statement of activities, the revenue and expense of the organization that you all have, or anything, again, that anyone on our team wants to add?
I'm sorry, I feel like I'm always the one that has a question, but a big question that my whole team has is the whole money's carried over to the next year. Can you speak into that a little bit? I mean, I see on the one where you said deferred revenue is collected monies that will happen in the next year. That sounded to me like those were restricted funds. Like if we applied for, a grant and we'll find out in December if we're going to get it, well, that will be restricted for something for next year.
Mm-hmm.
That totally makes sense. But most nonprofits bring in the vast majority of their income the end of the year. Where does that go, and how do you explain to funders, like, okay, I'm ending the year with all this cash in my bank, but I need that for next year? What does that look like here? Does that make sense?
It does. And that's a really good question. And I think revenue recognition for nonprofits is one of the most complicated topics. And it is something that we could spend like a whole nother session on just that. But there's a couple of different things that you mentioned. So I'll give you a more specific example of like deferred revenue as it relates to the center. So we have our annual conference, which is coming up in a couple of weeks. But we opened registration before our fiscal year ended on June 30. So it was open in June. So anyone who registered in advance of the year end and paid for that, that's revenue that we're going to defer and hang on to until the conference actually happens, because that is when all the expenses are going to be incurred for that program. So that's the piece about the deferred revenue. The other piece about grants that you brought up that you might receive at the end of a calendar year. So maybe your nonprofit's fiscal year is January through December. And you're not going to know if you're going to get it. So you're not going to record it until you know, and that's accrual-based accounting. And that's an important distinction. These financials are done on an accrual basis versus a cash basis. So there's different rules about when and how you record both revenue and expenses. So the majority of those probably are going to have a restriction placed on it because it's going to be for a program moving forward. So that is going to stay anywhere where you see with donor restriction, that money is going to be part of that total that's there. And it's really important to be able to make sure that your staff and board understand what's happening there, both in budgeting and as you're monitoring revenue and expense throughout the year, because you're right, it's sitting in your bank account, but you know you're not using it until later. And so that can come into play, like I said, when you're doing budgeting. But if it's got a restriction on it, it's not going to be released from that restriction until it's actually spent and used for the program or the purpose that it was specified for. So does that help a little bit? That's just touching the surface. Again, but it's a pretty complicated and can be pretty specific to different nonprofits. So does that help a little bit, Carrie?
It did. I think you helped differentiate between when people just see how much money is sitting in our bank account. Well, if you look at our budget for next year, that was helpful.
Yeah.
And if I could just interject too, in terms of the budget. So, I mean, that is a starting point, right? So, you know, when the financial statements are produced, whether it is for every board meeting that you have, right, where you give a report, or whether it is when that executive director or president and CEO meets with the staff person or the contracted person that's handling the finance of the bookkeeping, let me put it that way, the bookkeeping and the accounting, then that budget should be in front of us, as well as those that statement or those documents that are being produced to help us to understand the financial condition or the entire portfolio, right, of information generated from our financial data and information. So there is this thing called a budget that we should be aligning with as we kind of go through this process. And this information should be in front of your board every time you meet. There should be some type of report out or update from the treasurer and or the staff person that handles the bookkeeping and the accounting. So I just wanted to just interject that.
And you have 2 questions in the chat, Tracy. I don't know. If
Yeah, thanks, Lisa. I was just pulling that up. I think one question I see in there is an example of the document. I think that was referring to like the manual, the policy and procedures. And I know, again, if you're a member of the center, that we do have some sample documents within the Information Central section of the website. Somebody asked, are salaries located in general and administrative? And it depends. So one of the documents that we're going to talk about in a couple minutes is the statement of functional expense. And so salaries is something that you can allocate across programs, just like other expenses that you have. So I wouldn't say that you could look at general and administrative and you see 100% of salaries in there. Because some of your program staff, for example, are going to be working on specific programs. And so they're going to be letting you know how they're spending their time, and you can allocate salaries based on that. So that's another quick short answer to that. And then there's another question about, which is the one statement that would give you a better idea of the financial reality of the organization. They're all going to tell you something different about the organization, right? So when you look at the balance sheet or the statement of financial position, that is going to be a snapshot of the financial health of the organization, because it's going to tell you what the organization owns or has, and what they owe to people. But then again, when you look at the statement of activities or the profit and loss, that's really giving you insight and sort of the day-to-day of the organization, because you're seeing, what's coming in and what's going out. And that tied to the budget, which we're going to show you a sample one of those later, can be just a powerful tool for the day-to-day. So I don't know if I would say that there's one statement, because I think they each bring something different. But Dr. Palmer, if you want to chime in on any of those.
Yeah, so I would say ditto in terms of what you shared. Each of these documents present something different. And you also have to consider too, the point in time when you make the request for the statement. You're only going to be able to see transactions that have occurred up to that point. So, it's a real time when you generate one of these statements, typically it's coming real time. So you're going to see exactly what is happening at that point in time. And Tracy, I just agree that each document tells you something different about the financial position That is why oftentimes when a report is given, 2 or 3 of these statements are shared so that the board, I'm just speaking in terms of board meetings, so that the board is getting those different views of what is happening from a financial standpoint.
Yeah, absolutely. Absolutely.
Okay.
Before we move into the next one, there's one more question that popped in the chat about, is it typical for the finance staff that is reviewing the finances to stay for the entire board meeting, or should they leave after that report's complete? I'm going to give the attorney answer is it depends. It depends on your organization. I know
Exactly.
there are some where they're there for that report. Typically that finance report is given, as Dr. Palmer said, at every board meeting, or should be. I stay for our full board meeting, but again, that's what makes sense and is appropriate for our organization. So I just think it depends on the makeup and structure of not only your organization, but your board, and how closely connected they are to various staff.
And I think also that staff person, my perspective is the more they know about how the organization operates and functions, I think the more effective they are of being analytical of the finances. The less they know about programs and services, they're not really connecting the dots, in terms of kind of how all of that shapes up together. So that would be my response.
Absolutely. Absolutely.
Yeah. So.
All right, well, let's scroll to the next statement in this audit report, which is the statement. Actually, Leslie, can you go maybe one more? I was going to do the statement of cash flows. Yeah, right here. So again, when you think about statement of cash flows, you may have a different idea in your head of what this will look like. Again, this is one from an audited financial statement. You may, or your finance staff may have a statement of cash flows where they're really looking month by month, again, what's coming in and going out of the organization, to help you track, what your balance is at the end of every month. This one that we're seeing here as part of the audited financials. So this statement is going to provide information about all cash flows for the organization received from operations and investments throughout their fiscal year. So it's going to summarize the movements of cash coming in and going out, where that money is coming from and how it's being spent. So it's broken into 3 sections. Operating activities is going to include changes in cash from operating and programs and services. So you can see how they're looking at the increase and decrease in cash through things like contributions receivable, accounts payable, again, deferred revenue showing up there. And then investment activities. So those are going to be about the purchases and sales of assets and loans made or received throughout the year for the organization. And then the financing activity section is going to focus on activities from financing. So leases, credit cards, things like that will show up in that section. And then down at the bottom, you'll be able to see the change in cash from the beginning of the year to the end of the year. And this report, again, like all of the others, is going to have that previous year for comparison purposes. So now, Leslie, if you'll scroll back up, we'll take a look at the statement of functional expense. So this report is one that shows the functional classification of expenses. And what that means is what program or support area this expense is for. And we're not going to go into direct versus indirect really again, but because of time, but you can see that the columns here are reflective of that. So you've got program services. Your financial report might list out each of those programs separately and give you a total of program services. But these are expenses that were used for the particular programs or services that your organization is providing. And then support services is defined by general administrative, fundraising, and then this particular organization has one that's called direct benefit to donors. So again, you'll see these line items are going to tie back to your budget and back to your statement of activities. And again, program services include expenses incurred to meet the mission of the organization through program services directly or indirectly. And then the support services that we talked about is often referred to as the operating or overhead. And then you've got fundraising and development expenses. So many nonprofits, when they file their 990, they need to have this categorization of functional expense anyways, because it has to be included there. So a lot of nonprofits include it in their audited financial report as well. We're not getting into this, but there are different methods to allocate expenses across programs. One of them we sort of touched on with the question about salaries. All I'll say about the allocation of expenses is that you want to make sure that it's a reasonable methodology for your organization. And that example is how folks spend their time is one example. Yeah, and I already mentioned this is something that's included on the 990. So again, it's something that nonprofits like to include in their audited financials as well.
I see a question there in the chat about audit there.
Yeah, so how important is an audit? We're only 7 years old. Is it based on your total operating budget? Whether you need an audit or not does depend on the organization itself. And I think there's different factors that go into that. A lot of foundations require nonprofits to have audits or to include those when they're applying for grants. There may be some cases where a financial review is sufficient. So it does kind of depend on the organization. And we have another slide that goes into the audit and the audit committee and the auditor and that stuff later down the road. So maybe that's all I'll say about that there, unless Dr. Palmer, you want to chime in on that question.
Well, I think it's okay. I mean, we could cover it now, and then we don't have to do it then. But there's also another element called financial review. Some nonprofits will have a CPA do a financial review. So it is not a full audit, but what they will do is review your books and give you some feedback just in terms of kind of where you are. And Tracy is exactly right. From what I've experienced, most nonprofits have an audit. I mean, that's just a good practice to have. Now, I say that, but you also have to have the resources to pay for an audit, because audits are not cheap. I mean, they have a price tag attached to them. But it is a good practice to get into. In your information, you have a link to a document titled Generally Accepted Accounting Principles. So I'm going to take you to that. Not to step away from this too soon, Tracy. We can volley back and forth here. But you do have some information in your packet that gives you kind of the general accepted accounting principles that you can begin to align with. And an audit is a part of that. That's just a really kind of good practice to have, is to engage in that so that you are getting an external review of how you are managing your finances. And so that page number is 104. Someone is asking where that is in the workbook. So that's available to you. And then, of course, what Tracy was walking us through is the audit report. So this is after an audit is completed and the report comes back to the nonprofit. So that's important. There are two other documents that are also significant. That is the IRS 990. That's another reporting. So you're utilizing the information in some ways that come by way of the audit to complete the 990. And so that's important to pay attention to. I'm going to have Tracy go ahead and highlight the 990. So if we could, the audit report comes with the audit. I don't know any other way to, the audit, there's a question about that, but you do the audit, you get the report. So that's kind of how that works. I hope that answers that question. This is the 990 that is required by the IRS for all 501c3s. And let me just say, not completing the 990 could jeopardize losing your 501c3 status. So make sure you are completing the 990. And there, from what I understand, staff has increased with the internal revenue related to 990s. So make sure you're completing those so you don't lose it.
Yeah, that's so important. And we're just going to, again, hit the highlights here. The 990 can be, and the schedules that are attached is a very long document. And we don't have time to go through all of those, but we're going to focus on this main 990 form and the highlights. So as Dr. Palmer said, this is a nonprofit organization's tax document. It is required to be filed annually with the IRS. The deadline for this is based on your fiscal year end. So if you're a June 30 year end, then it's going to be due November 15th, which is the 15th day of the 5th month following your year end. There are a couple different versions of this. This is the standard form 990. Your organization may be able to fill out a 990 EZ or a 990 postcard. And that depends on the organization's gross receipts as to which one that you complete. The other thing that I'll mention, besides what Dr. Palmer said about how important it is that in 2019, there was a mandate for the various versions of the 990 to be required to be filed electronically and done so through an authorized IRS e-file provider. And we just mentioned that because that can be burdensome and costly for some nonprofit organizations to have to do that, but it's an important piece to know. Before I talk more specifically about the form, a few other things are 990s are required to be open to public inspection. One place that folks go to look at an organization's 990 is GuideStar. You need to be able to provide this if it's requested by someone. And there's various entities that look at an organization's 990. It could be a donor, a funder, a partner, or just a member of the general public. And aside to that point, and aside from it being a tax document, you really want to use your 990 to tell your organization's story and your accomplishments. There's a section in here that's program service accomplishments on the main form. And if you fill that up, you can go to the Schedule O, which is sort of the catch-all. But since it's open to public inspection, use this to talk about your accomplishments throughout the year and your different program areas. Because it's a way to be able to provide that information to the public or to funders. Your board should review the 990 prior to filing. In fact, there's a question on the 990 that asks, did your board review this prior to filing? And that should include giving them time to actually review it and ask questions, not just check the box that, yes, you sent it to them. So in terms of the form itself, you can see this first page is just a summary of financial information throughout the year. It will tie back to your audit if you have one, but you can see it's a separate document. The main form is going to include these summaries. It's going to include a checklist of required schedules. There's a section on tax compliance. there is a governance section that includes questions about the organization's board, your governing documents, committees, things like that. There's also a policy section that asks about various policies the organization has, like a whistleblower policy, your document retention and destruction policy, and policies about how you compensate the executive director or other key leadership team members. So that was really all I was going to highlight off of the 990. And again, Dr. Palmer, feel free if you have anything else aside from what you've already added to this. But again, we could spend a whole day
Yes.
just on this.
Yes. So I don't, but I will kind of make sure that everyone knows that you have a link to this document in your material. So you can go there. Also, if your nonprofit has completed a 990 in the past, it may be a really good idea to get the one that's completed so you actually see the information that has been submitted on behalf of your nonprofit, the nonprofit that you represent here today in this session. The other document that we are expected to complete is the annual report. And so again, the annual report, there's a link there in your material that highlights and that shows what an annual report is. We are utilizing the Big Brothers Big Sisters information. And so all of this information aligns: the annual report, the 990, the audit report, all of that is kind of one big family of financial documents and information that is produced. The other thing about the annual report, with the North Carolina Secretary of State's office, each nonprofit that is listed with the Secretary of State's office is expected to provide annual report information. Now, what's unique about that is that there are questions that you answer. Tracy, I don't know if you want to speak to that at all.
Let's see. I don't have that pulled up in front of me actually to chime in. So my apologies.
No worries.
On that. Yeah, they're just important to know that there's that other piece to it with the Secretary of State's office.
Mm-hmm. So I would just make a note there, and that's, I say that's real easy, but you go to the Secretary of State's website, you pull up your nonprofit, it'll pull up all the documents that they have on file related to your nonprofit. And then there's also information about the annual report, unless it's changed. And let me tell you, things change quickly. Unless it's changed within the past 90 days, in terms of me having gone out there and looked up a nonprofit, there are questions that you answer that are related to an annual report. So that's important to remember. Team, can we go back to slide 16? I just want everybody to know where we are with what we have covered.
And then a quick bathroom break, I think folks are asking.
We are getting there. We are certainly getting there. But I just want to make sure that we highlight kind of what you have in front of you. So we have worked through this information, and you have an accompanying handout, a document with handouts and links to take you to actual examples and information related to each of these items. If you go to the next slide, Tracy has already highlighted, and so have I, these different pieces here in terms of your internal controls. We talked about guidelines and policies. You can have a financial review completed by a CPA. You have your bylaws. When it comes to an audit, typically there's a committee that is crafted alongside of your finance committee, if not the same. Some nonprofits use those interchangeably. And then you have to determine what firm you're going to use for the audit. The next slide. So where we started off here was looking at a picture of diversified revenue. And this is where we want to end up. This is our goal, diversification of revenue. We want to have fundraising going on, if possible, fee for services, that's unrestricted dollars, if you can offer that, or fee for you engagement in your programs, grants, contracts, investments, endowments. These are all ways that you can diversify your revenue. We don't want more than a third of your revenue coming from a single source. And I think, I forget which one of us pointed that out when we looked at this image initially. But this is kind of where we want to get to. Tracy, I'll let you have the final say here, and then we'll go into our break.
All right. Yeah, thank you so much. I know that was a lot of information that we went through quickly, and hopefully we got to answer most of your questions. You can see how all of this is kind of linked together, and how beneficial it can be to just be transparent and put these things on your website if you have it, because they all together, they all give a really full picture of the financial health of your organization.
There was a question about solicitation license that's related to fundraising. So we'll pick up there when we get back from the break and we jump into our topic about fundraising. So let's go to the gallery real quick. Okay, I told you that this was going to be kind of moving through this. Literally every item that we highlighted, and the detail that we provided about the financial statements, literally there could be a whole day spent on all of that. It just depends on what your nonprofit needs. What I will say, I highly encourage that you inquire with your board of directors to have what I call financial management work sessions each year. I've started sharing that with nonprofits that I interact with probably in the last 2 or 3 years, so that the board has an opportunity to do a deep dive into what we just shared with you with those individual nonprofits. When we're in a board meeting, that's not the space to try to really school and tutor board members on all of this, nor staff. I mean, if you've got a management team of staff, they should understand the financials as well. So I highly encourage these work sessions with the board, financial management work sessions with the board, and financial management work sessions with the staff, so that everybody who impacts the bottom line understands how these tools and how these types of documents, are should be utilized, developed, crafted, within your nonprofit organization. So we are going to go into a break. It is now 11.
You went into mute, Dr. Palmer. I don't know how or why.
Not sure. We'll go into our 10-minute break. And so we'll return at 11:25. Is that right? 10 minutes?
That's correct.
Thank you all.
Thank you.
As it relates to where we are, if you could put in the chat for me, just real quick, in 3 words or less, right now you're feeling what about financial management? Just put it in the chat for me. You're feeling what? You're thinking what as it relates to financial management? Because we are about to move into the fundraising topic. So what are we feeling? What are we, Lisa, I'm gonna let you take it from here in terms of what we see.
I'm just chuckling alone. I hate numbers. On the right track. Some good comics there. Overwhelming. For sure. I like that. That's funny.
Okay. All right.
Remember, comfort food is coming. When you eat, you can reflect to bring down those anxieties.
Oh, my goodness.
Glad I'm not the finance person. More enlightened, more informed. Yeah.
Okay. Okay, okay, okay. All right.
Like that Holiday Inn commercial. You know, I'm not the doctor, but I did sleep at a Holiday Inn last night.
Oh my gosh. Wow. Thank you for just allowing me to get a check-in here with everyone. We're getting ready to hit the ground running with fundraising. And as our next topic for today, we have two kind of hands-on activities planned. So I want to make sure that I get that in here. And I think one of those is a breakout as I'm looking at my notes. And then the other is us just kind of working through a process. So fundraising. Fundraising is one of those areas of management of a nonprofit that you just have to do it and be consistent. Doing fundraising a month before or 2 weeks before payroll is due is not how you do fundraising. Fundraising is planned, it's strategic, and it is the implementation of strategies over a period of time that yields the kind of giving that you need for your nonprofit. And, you know, you got to start, you know, so if you haven't started with a fundraising, just kind of strategy or plan, we definitely have got to, you've got to do that. So we want to highlight a few things. So in your material, you have a document titled, What is Fundraising? And then you have fundraising pitfalls, and you have the definition of fundraising. So that's where I want us to kind of focus on. When we fundraise, what we are trying to do is we are trying to raise assets and resources. And those resources vary depending upon your nonprofit to support our nonprofit, or sometimes fundraising is for a specific project. So this idea of raising money, you know, it boils down to identifying, you know, prospects. If you don't have a donor base already, it's identifying prospects to actually ask for money. I mean, there's no other way to put it. I mean, that's just what it is. And so there are a multitude of ways to go about doing this, but we've provided to you a framework that is pretty consistent across nonprofits. So team, if we could go to slide 22. And then this coincides with, it looks like pages 109 and 110 in your workbook. But we're going to go to slide 22. So if you think about fundraising in general, and I want to walk us through these first, and then team, I'm going to come back to the actual activities that we have planned. But I want to go ahead and walk us through these stages, and so that we kind of have the overarching understanding. So our fundraising stages are identification, cultivation, solicitation, and stewardship. Okay. Identification, cultivation, solicitation, and stewardship. These are kind of the ways in which fundraising happens. So you can go ahead to slide 23. So when we think about identification, we're talking about donors and a donor base. And in some cases, we already have a donor base, and in some we don't. And then there's also the instance of we want to increase the number of donors. So we do what we call prospecting, and we identify prospects. So we have a way to work us through that. This also requires research, this identification stage. Go ahead and go to the next slide. It should be 24. There we go. So cultivation. Once we have our prospects and we've identified who we want to ask to become donors, and those individuals become new donors. So we cultivate that. And then we also continue to cultivate the relationship we have with our existing donors. Once we have donors, we can then utilize a platform to manage the donor base, which is ultimately a database. What that does is it gives us a way to review and study giving, and we can analyze our donor giving. Once we do that, then we can begin to communicate with those donors to identify whether or not we want to upgrade them or whether or not we want them to continue to give in at the same level. So this cultivation is about acquiring who those donors are, arranging them and organizing them in a database, analyzing their giving, and then communicating with them. You can go ahead to the next slide. Solicitation then comes next. So once we have this apparatus in place where our donors are, and we come up with the way that we want to communicate with them, we then begin to decide how we're going to make the ask. Once we've made the ask and they've given to us, then we want to maintain that donor relationship. And oftentimes nonprofits will have what we call an annual campaign. And that annual campaign is giving every year around the same time. We have an annual giving campaign. It varies from nonprofit to nonprofit, but ultimately this particular apparatus, the annual campaign, helps us to acquire unrestricted dollars for day-to-day operations. So this is typically what we see, and we want to work to get to this place. You can go ahead to the next slide. Once that happens, then we want to steward what we've received. So we have the campaign, or we make the ask, we get the dollars in. Now we want to acknowledge and recognize our donors if they want to be acknowledged and recognized. If they want to be acknowledged and recognized. And then we want to make sure that if there are any guidelines related to each of our donors, we want to make sure we're following those. Some donors want to remain autonomous. I mean, they do not want to be named. They don't want to be acknowledged, but some donors are very much okay with that. And so that is what we mean by stewardship. So when we think about donor communication, you can go to, yes. When we think about this donor communication aspect of the, I want to go back to cultivation. You don't have to move the slide, but when you think about cultivation and you think about solicitation, it's necessary to determine how we're going to communicate with the donors. So are we going to use traditional methods? Are we going to use social media? And then when you think about donors and stakeholders in terms of fundraising, those are the individual donors, the grantors, volunteers, board members, staff, the community at large. We have to determine how we're going to communicate with the stakeholders that are helping us to raise money, to be frank. So that is important in terms of how we think about these stages. So go back to slide 22 for me. So what I did is gave you the full picture, okay? This is the full picture. When you think about fundraising, you want to build out, I use the word apparatus because it looks different for every nonprofit. You want to build out how you do identification. You want to build out how you do cultivation. You want to build out how you do solicitation. And you want to build out how you do stewardship. And again, this is a framework that we see across nonprofit organizations. I don't know, team, does anybody on the team have anything they want to add to this before we go into some specifics for each one of these?
I probably have some as you get into the specifics, but
Okay.
overview is fine. Mhm.
Okay, great. All right, so let's look at, let's go to identification. And so what we're going to do is we're going to work through an activity on prospecting, okay? On donor prospects. We're going to work through an activity related to that. In your workbook, you have a handout titled Prospect Identification List. Prospect Identification List. Okay. And so I'm going to walk us through how to use this, this document, or how to use this worksheet, really is what it is. And so, and we're also going to use breakouts for this. Now, we won't be able to stay in the breakouts for a long, long time, but we'll definitely be able to stay in the breakouts long enough for you to get the concept and for you to get the gist of how you generate a donor, a prospect list. So here, what we're going to do is each of us are going to generate a list, right? And so your name goes at the top of the page where it has contact name. So on my list, I'm putting Pamela Palmer. And what we are all one big nonprofit, let's just say. We're all one big nonprofit. And we're going to generate some prospects to solicit, right? For, or to ask for donations. And so how we're going to do this is our fundraising goal is $500,000. So I'm gonna have you put your name there, and you're going to write $500,000. That's how we're going to do this. And then what you're going to do is, without a whole lot of thought, is you're going to list 15 people that you know. Just 15 people that you know in general. Don't think about necessarily at this point how or why you know them. Just list 15 people that come to mind that you know, that you have a pretty good relationship with, and that that you hold in high regard, and they hold you in high regard. So give me a list of 15 people. You can do first names, last name. I'm sorry, do first name and last name. Give me a list of 15 people that you know. Once you have those 15 individuals, I want you to put a check mark in the second column says believes in cause. I want you to put a check mark for beside each of those individuals who believe in the cause or the mission and the vision of the nonprofit that you represent here today. Just that they believe in the cause or they believe in the mission. And you're going to put a check mark by each name. So you should have 15 people that you know, and you're going to put a check mark by those that believe in the cause. Of the individuals that believe in the mission and the vision of your nonprofit that you represent today, put a check mark by those individuals that give away money. Those individuals that give away money. You know them, they believe in the cause, and they give away money. Now, I oftentimes get the question, well, I don't know if they give away money or not. Well, then we can't put a check mark, right? Not unless, you know, you have an educated guess that they do. Okay, so we got our 15 people that we know. We got a check mark by those that believe in the cause. And we are also checking off those that believe in the cause, how many of them give away money. Okay. And then we're going to indicate how much we would ask them to donate. So once we indicate who would give away money, we want to now know how much money do we want to ask them for? Now remember, we're one big nonprofit. So there are 45 of us on this call. So each of us are generating a list of individuals who believe in our cause, they give away money, and now we've identified how much. Okay. Now, if we could go back to the gallery view, we're going to go into breakouts. And I want you to go to the next page in your workbook, which is the master prospect list. Okay. Everybody, I hope you're hanging in here with me because I'm giving quite a bit of instructions. So when you go in your breakouts, what you're going to do is you're going to generate some information for us. You're going to, in the amount from the column that you have, amount to ask for, how many prospects is that, right? How many prospects is in your list? And you're going to the very last column now. How many prospects is that? And then how much are you asking in totality, right? So let's just say by the time you got to this column on amount to ask for, you had 5. And for each of the 5, you could ask them for $5,000. So it means you got 5 prospects at $5,000 each. The total ask is what? 25,000. Is that right? I see some heads nodding. Okay. All right. So that information, I want you to go ahead and calculate before you go into breakout. How many donors is it? And how much does that equal? I'm going to wait just a quick minute here until you have that information. Okay. When you go into your breakout, you're going to use the master prospect list worksheet. And so everyone should complete the worksheet, not one person. Everybody's completing the worksheet because you're in different spaces, right? You're in different places. So when you get to your breakout, you're going to list the number of donors that you derived, that you came up with on that first worksheet. Hey, Janet, I see your friend there. You're going to look at all the smiles in the in the Zoom windows. So when you get to your master prospect list, filling that out with your group, if there are 3 in your group, you're going to write all of the names that you came up with in the last column of the identification list. You're going to list all of those. You're the contact person. So if I gave 5 to the list, I'm Pamela, I'm the contact person. You're going to determine who should solicit, because just because I'm the contact person doesn't mean I'm going to be the one to make the ask, right? It might be someone else. And then how much, you've already came up with that. So column 1 and column 4, you already have that information. And we're just going to leave the last column blank for the purpose of the skill building that we're doing. We're all good. So when you get together, you're going to put all your names together. You're going to put all of the amount that you solicited, right, together. So you should have a total number of prospects. You should have a total amount to be solicited. You all know who the contact folks are because you're the one providing the name. And the solicitor and other info columns, we're not going to focus as much on that today. And I'll come back after the break and make sense of that. All right, Rebecca, I'm going to pass it over to you for us to go into breakouts.
All right. And we'll be in breakouts for 10.
Yes.
right?
Yep.
Okay. All right.
Yes.
If you have any issues, if you're still in the main gallery, and you have any issues joining a breakout room, let me know, raise your hand. See a couple of folks, it looks like may have been assigned, but for whatever reason aren't able to join.
Okay. If you're in the Zoom and you can hear my voice, please go into a breakout room.
All right.
You should have gotten an assignment, so please go into your breakout room.
Yep, I'm gonna, if
Mhm.
you let me know that you're not assigned, I'm gonna go ahead and assign you right now. Thanks,
Mhm.
Tamika.
Yep. And so, so what we're going to do now is just kind of come full circle with the identification and then kind of the cultivation and in terms of what it is that we are wanting to focus on with the master consumer list, prospect list, master prospect list. But I guess they're consumers too. So give us an idea, and I'm doing a tally. So share with me, let me switch this over. Share with me what we ended up with and just kind of give me a shout out. How many breakouts did we have?
We had 8 rooms.
All right.
Yeah.
All right. So number one, tell me how many donors did you end up with in that first column? How many donors?
Jenny said in the chat, group 1 had 40
Thank
prospects.
you. Number 2. Or any order. Just keep going, Rebecca. Just keep going.
Okay. I'm trying to see which groups. Some of you may not know which group you were in because okay, 50.
Okay.
Group 1 had 52 prospects.
Thank you. 52.
Yep. Group 2, I can read off names and somebody can report back. In group 2, we had Annette, Cassidy, Felicia, Rita. Okay, no one from group 2. If you get this
right.
and you tallied it up, we can put it in the chat and we'll add it to our tally. From room 3, we had Charmaine, Connie, Regina, and Rhonda. You can unmute yourself or you can pop it in the chat, one of you.
Are you asking for how many donors we had as a total?
Yes.
Yes.
Oh,
yes. Sorry if that wasn't clear. Yes.
Okay,
Regina,
sorry.
thank you for
So
clarifying.
all of us had 15 total, that'd be 60, right? Okay, thank you.
What number are you?
Number 3.
Number 3 was 60. Okay, thank you.
And group 4, we had Donna, Felix, Jessica, Kim. And who else do we have in there? Jocelyn.
Yeah, we ended up with 3 of us on there, but, and then we got sidetracked. So,
So give me your best guess. How many did
well,
you
I
have?
know I have 12 on my list, so I
Okay.
don't know about the other ones that.
Okay,
we
I'm
had,
gonna
but
go with 12. Keep going,
Okay.
Rebecca.
Group 5, we had Daniel, Julie, Sadie, and Tamika. Group 5, 13
13.
donors.
Okay.
We'll go with that, Sadie.
975.
Thank you.
Yeah, I just
Seven.
shared what I have on my page.
Okay.
All right.
And then
Group
room
7.
6, we had Carrie, Elizabeth, Lauren, and Sarah.
We got a little sidetracked as well about where we're talking, but I think each of us did have 15 on our list individually, but we only got
Okay.
on our cultivated list, we only had 2 with 1,500.
So you ended up with 2 donors and $1,500, right?
Yes.
Okay. Thank you. All right.
And room 7, Angela, Morgan, and Pamela.
We got
I
the
had
tokens too, but
14. I
Pamela
don't know
had.
about Morgan and Angela.
Yes, that's what I was getting ready to say. Pamela had hers. I didn't have anybody
Okay.
at all. I was
Okay.
thinking about it from the bigger nonprofit perspective instead of just folks I know. Now, folks that I personally know, I could get about 3 and maybe $1,000.
Okay. All right. Okay.
So we got 3 and 11, and then
3,
what was the other
11.
number for that group?
14.
Okay.
So
So
what
is
was the
that
total?
27?
27. Okay.
I had
Is that right?
1,900 on mine.
Okay.
Okay. And then group 8 put theirs in the chat. I believe we had group 8 went rogue with 3 of
Okay.
us, so we didn't tally. We talked about cultivating, but didn't share numbers.
Okay. All right. I've got 1, 2, 3, 4, 5, 6 groups. That's as much as I could,
Yep.
based on how we did the report back. Is that what you have?
Yes, that's what I have. You want me to
Uh,
tally up those numbers
yeah.
of donors?
The folks that had 52, what was the total amount of money? The group that had 52, what was the total amount of money?
$32,900.
32,900. Okay.
Mhm.
And I never heard from group 2. I don't have anything down for them. The group that had 60, what was the dollar amount?
I had 10,000. I think Rhonda had 7. I'm not sure how much Miss Connie and Miss
Yeah,
Connie, how much?
I had about 10 as well.
So
10,
that's
10, 27.
27,000.
I had
Thank
about
you.
1,000. You can add
And I had 1,000, so that's 28,000.
28,000. Thank you.
Go ahead.
The group that had 12, what was that dollar amount?
Group 4.
Hang on a minute. So if we did, hang on one second. $60,000.
60,000.
60,000.
Mm-hmm.
Great.
Okay.
Thank you. So Rebecca, I'm going to let you tally the dollar amount you have.
Yep.
And the number of donors. If you could share that, that would be great.
Okay. Do we want to get numbers for the other groups or
If they
or
can
do
do
we
it
have that already?
Yeah, if they can do it quickly, we will.
Okay. Real fast, group 5 that had 13 donors. Do you
I
have
thought
an
that was
amount?
975. That was 975.
975,000?
$975.
Oh, got it. All right. And group 2 or group 6 with 2 prospects or 2 donors, what was the amount?
1,500.
Okay. And group 7, we had 27 donors. What was the amount? in the chat here. And I'll add that 3,500 to list. Group 7. Oops. Angela, Morgan, Pamela. Okay. Okay, so I'm going to add in the additional. Right now I'm up to 123, 375, and I'm going to add in 3,500, 1,900,
Mhm.
and 1,100.
Okay.
And my total is just under 130K.
Okay. So I'm gonna say 130K. Just
Yep.
and then how many donors is that?
166 around there.
166.
Mhm.
All right. And we probably had half of our groups that actually got through the process is what I'm thinking. Okay, great. So this is a way to begin to build a donor base. It's going to be very difficult to fundraise if you don't have a strategy. Random asks without a strategy is not going to lead to sustainability in terms of receiving unrestricted dollars. You have more flexibility with unrestricted dollars. So if you had mobilized 100 people to help you prospect, and you broke them off into groups, and you gave them the task that I just gave all of us, your goal is to reach your goal, right? With the dollar amount in terms of the prospects. So our goal was to raise $500,000. That's what I gave us. Rebecca tells me that in our prospecting, we got up to 130. We are way off, right? We are way off. So what that means is we got to go through another round of prospecting, right? Until we can at least get our prospect list up to the value, right? Or to the number that we're wanting to raise. The last class that did this for us, or with us, there were 6 groups. Their group 1 had 70 prospects. Their group 2 had 64. Group 3 had 41. Group 4 had 67. Group 5 had 40. Group 6 had 40. They ended up with 322 prospects for the same goal, right? Their goal was 500,000, just like yours. And when we tallied it all up, they actually prospected $1,262,805. That was their prospect, right? That's what they potentially could raise. Whenever you decide that you're going to utilize this approach in terms of building your donor base to fundraise, it's going to be very important that you gatekeep the process, because you want to yield whatever the goal is. In this case, it was 500,000. So again, these are principles that you are applying. And we got to 130,000. Our goal was 500. Now we've got to do some more prospecting, right? We got to reach out and bring in more individuals into the mix. And then we've got to gatekeep the process so that we can ultimately reach our goal. If we don't gatekeep the process, things are just going to kind of fall where they may, right? It's just going to be, we're going to end up at 130. We're not going to get our 500, right? So you keep kind of going through that cycle. And what we want you to gain here is the skill, right? We're skill building. Andrea, did I pronounce that right? Andrea? Okay.
Andrea.
Andrea.
Yes.
Sorry.
My daughter's elementary school did this recently. She's in a charter, and they asked the kids to provide 10 cell phone numbers per kid. And so, the parents giving like family or friends phone numbers. And then they just sent out text messages over like a period of 3 weeks, like, will you donate to the school? And just that campaign raised like $50,000 just with the
Mhm.
middle school kids. And it was like, there was not a
Mhm.
whole lot of effort that went into that. And I was really impressed, like the multiplication factor of like each kid having at least 10 numbers can really bring in a lot of money.
And what I will say is my son, they do that with their football team, but they use emails, and there are platforms out there now that you can use. Some of you maybe have given up your email address, and then later you get this message saying, give to this cause. But keep in mind, there's a human being on the other side of that platform, and there's someone gatekeeping that and managing that and paying attention to make sure they get to their goal. And you now, in the case of your daughter's school, now they have, for all of those who gave, now those are donors. Now those are actual donors now. So now we can do something that we call upgrading that donor, because that first gift is an impulse gift. You want them to become habitual. You want them to give over and over and over every time you do that annual campaign. And then once they do that, once they've done that for some years, you want to upgrade them. You want them to give more. So if you look in your packet, you have a handout titled Donor Base. That's what we were doing today, is helping you to begin to build a donor base if you don't already have one. If you have one and you have existing donors, then you want to study their giving, and you want to determine if you want to ask them for more. Do they have the potential to give more? And you're using that same process. You have another page that says ask for it. You only get money if you ask for it. And the asking should come with a strategy. So our strategy today was everybody generate a list, come up with how many people can give, identify how much they can give, go to your committee. So we had 8 committees. Go into your committee work, compile your list, and now you have now you have a master list. So that was kind of the skill building today. But keep in mind, there has to be a person that is gatekeeping the process. So my job today was to gatekeep the process. So what I would do in this case is I would go back to those groups that I think we had some groups that went rogue. Then we had some groups that talked about cultivation. Then we had some groups that did something else. So as your gatekeeper, I would go back to those groups and say, okay, I need my prospects. Give me my prospects. Tell me how much they're going to give so that I can work the master list to begin to build our donor base. Fundraising doesn't happen by osmosis. It happens by having a strategy and using that strategy to ask. So I want to kind of bring a little bit of closure to that exercise and just kind of get your initial thoughts about that. What are your thoughts? We were one big nonprofit. What are your thoughts about what I've shared related to our exercise and what we were working on?
I think that we probably know more people than we think we know, and that people will give more than we think they would give. So we just need to work harder on our lists and increase the numbers we ask for.
Yeah.
Because they'll always give, like, if you give them, like, would you give a gift of like between $1,000 and $2,000? They're always going to give they'll give it 1,000.
Okay.
If they'll give the lower number. But if you just ask for more, they can always opt to give less. But if you start with a lesser number, they're going to give less.
Yes. Okay. So
what I found out is that even when you think you don't know anybody, the people that you know may know somebody.
Absolutely. Absolutely. And so whoever you identify on your staff, or if it's you, or if it's a board member, when you're trying to build up that donor base, right? When we're trying to build up that donor base, we have to keep at it, and, when people see us coming, those of us who are the gatekeepers, They're like, oh Lord, here she comes again. She's following up on this list to try to make sure we get those dollars in the door. I oftentimes, when I'm interacting with executive directors of nonprofits, and I say, you know, what is your biggest need? And what they will tell me is that we need money. And so then what I say is, okay, tell me about the strategies that you've been using to ask people for money. And oftentimes they don't have one. So this is why we incorporate this in this process. You want to tap into the people that are affiliated with your nonprofit that don't mind asking, right? That are open to doing that. But that's how you get those dollars in the door. Lisa, I'm going to come back to you for some comments, but I want to go ahead and do the next piece, and then I'm going to let you comment there. In your workbook, I want you to go to, so that's kind of Dr. Palmer's, 1, 2, 3 steps to generating a master prospect list and giving you a framework for doing that. Now, what I want to share with you is 3 types of giving programs. So we highlighted annual giving with this exercise. We highlighted annual giving, but you could use that prospect listing exercise to do any of the givings. So I want you to go to the types of fundraising. You've got 2 sheets there. One says annual giving, major giving, estate giving, and then with an overview. And then the next page behind it is types of fundraising. And there are examples of annual giving, major giving, and estate giving. So there are examples there. Okay. Your annual giving is where we started today. Because I always say to us, page number is 120. I just saw that in the chat too. The page number was given to us, 121 and 122. Thank you, Rebecca. So here are examples. Annual giving is level 1. That's level 1. So we did the very first step, and that is focusing on a donor base. And then how are you going to solicit? And then is it going to be direct mail? Is it going to be in person? Or are you going to have special events? So that's kind of the annual giving. And then the major giving is when you're seeking out corporate donations and donations from foundations. Another example of major giving is capital campaigns. You might do a capital campaign for a building or for some big ticket item that you are in need of. You can very well have an annual giving campaign and a capital campaign happening in the same year. You just got to time it right, but it could very well happen in the same year. Annual giving you do no matter what, because annual giving is for your day-to-day operations. The annual giving, having a strong, robust annual giving apparatus helps you to move into major giving and estate giving. Because if donors are going to give a major gift, or if they're going to bequest gifts to your nonprofit, it would be important for you to have a good track record of annual giving. So that's in terms of the different types of fundraising there. If you go back to the left in your workbook, you'll see the pyramid. You go back to the left, the pyramid of giving. You'll see annual giving, major giving, estate giving. The foundation is annual giving. Donor base, donor giving, unrestricted, that's the foundation of fundraising. Then you can move into these other levels. Not unless you have an opportunity where you just get a windfall and you can, you can kind of go from there. But in terms of that, and so the pyramid is synonymous with having that annual giving on the bottom. It's the foundation and holds up the other giving, because when you engage in a major giving campaign or an estate giving program, you're going to need resources to do that. It takes money to make money. And so the annual giving is the basis. It's the base. That's where you start. Team, I am going to stop there with our fundraising programs. And we do have, grant writing and earned revenue and social entrepreneurship. I will pick up there next week, just with those couple of items. That's kind of where we are in the kind of end of today. But the takeaway is the fundraising framework, the 4 stages, developing your prospect list and growing your donor base, and then understanding the 3 primary giving programs that you can develop as it relates to fundraising for your nonprofit. And Lisa, I know you had some comments, and then Rebecca, I'm going to turn it over to you. If we could, Lisa, once you finish though, let's do a temperature gauge, kind of where we are with this topic.
Yeah, really quick. I mean, Dr. Palmer, you pretty much went over the essentials, and I just wanted to just say, because I know fundraising is scary, and always making sure you bring your executive director in as part of the planning with your board. Of course, it'd always be a part of it. And what's the worst thing that can happen? You can screw up, okay, but things take practice. I mean, let's just say it as it is. You can feel bad if somebody says no, but I think out of your 10 asks, you're going to get at least 7 no's, but, get used to it. It's going to happen. And I think the more you practice, the better at it you'll get. And one of the advices that my ED said, which I thought I loved her saying, she said, if you ask for money, you'll get advice. And if you ask for advice, you'll get money. If you ask for advice, you'll get money. If you ask for money, you'll get advice. That's the way I should have said it, right? So just think about that. And then I want to leave you with one last, hopefully an inspirational saying that I found. It says, so why are we afraid to ask amazing people for help when we know we have an amazing organization made up of other amazing people doing amazing things for more amazing people in amazing ways that is having an amazing impact in our amazing community? Isn't that amazing? And isn't that true?
I love
it. Hopefully that helped. I see the face.
Absolutely.
When you go into your temperature check, hopefully that will make people think and go, yeah, that's right. It's not so scary.
Give me a sense of where are we? And keep in mind, fundraising is a journey.
Mhm.
It is not a one-off.
Mhm.
It is every day of the week. It is all the time. So give me some sense of where we are with fundraising.
Did anybody write that down?
Uh-oh.
Betty quit.
Fundraising.
Yep. Excited to foster current relationships, build new ones.
I just wanted to say I really liked that activity. I've spent my entire career fundraising and I've raised many millions of dollars. However, the aspect that this agency that I work with, that is probably my biggest frustration, is the lack of individual ask, except of board members.
Mhm.
And, there's an approach that needs to happen differently when you've got a legislature telling us we have to do a 19% match to the money that we get from the state. And we have to do all of this in-kind matching. And we focus so much on that it's hard to look at the forest for the trees on doing the individual asks. And I wanted to do something as simple as donate $1 for every child in your life. And do a campaign for every person who lives in the county. And because $1 for every child in the county would, just for children under 5, would be $35,000. If you were to get it for the children under 5, which if you did that kind of ask, you would start to see people doing that, right? So it doesn't have to be huge amounts of money you ask for. It's about the approach that you use, and who the person is making the ask, and the believability of why what they do is important. And I was telling my team, I had the chance yesterday to do Meals on Wheels as part of our United Way community contribution. And I went to this one door, one of my team members and I said, you know, I would do this all day long, every day, if it was just about meeting people and having conversations. And I said, you know, if I were an executive director, one of my first jobs would be to go out to every single childcare, if I were in a partnership situation like I'm in now, and meet the directors. It's not about raising money for me. It's about finding out what their needs are, one, and two, knowing my face, knowing my name, and knowing I'm there for them. Just that alone, because of how that spreads, is the same kind of context of what you did here with people knowing who you are. That spreads that information of goodwill for your organization among the people that you impact. That starts to spread out to people that would be potential donors. So I just wanted to say that I like this because I know this stuff, but I also enjoy learning new stuff.
Thank you for sharing, Pamela. And what I would say is, go ask for money. Is, you know, generate that list and start asking. It is so practical. I think Lisa said it, alluded to this, but it can be scary. Come up with your approach and begin asking. You will be surprised. But
Permission from the boss first.
But it's
Don't have it.
consistent. It's consistency. It's consistency. Your donors and prospects need to hear ongoingly, you know, what the needs are and making the ask. Rebecca, I'm going to turn it over to you.
All right. Thank you all. Great work today. I'm going to share some closing notes that include some graduation prep. So it'll be really important that you all stay with us here for the next few minutes as we close out. I promise I won't keep you away from your lunch for too long. Real quick notes, when we go about sharing our, let me see, am I sharing the correct screen? Are you seeing graduation prep? Okay. When we are meeting up next week, we'll have a couple of things that you'll need to pay attention to. Be on the lookout for an invitation that will come from a website called Montage, MONTAGE. It allows you all to submit a quick short video. When I say short, 30 seconds or less. We'll try to keep the total video from getting too long. There will be some question prompts for you that ask you just sort of to share about your experience with the Institute. We compile all those up into one graduation video that we share that everyone can watch and enjoy. It's optional, so if you don't want to say anything, you don't have to. Please don't feel obligated, but it's a great way for you to pick one of those prompts real quick. Make sure you have good lighting and your sound. You don't have a lot of background sound, so it's very clear that we can hear you. And I'll be reviewing those. Probably the links will go out tomorrow, and then we'll likely set a deadline for Monday at noon to get those back to us. So I have a little bit of time on Monday afternoon to compile all those videos into our graduation video and share that at graduation next week, our last and final session. We'll start off with human resources, and then we'll have a clear break before graduation. There will be some graduation themed Zoom backgrounds to keep things festive if you would like to download one of those, and it'll give you instructions in the wraparound on how to upload those as your background if you haven't done that before. It's pretty easy to do once you have the instructions and you get used to using Zoom, but you can go ahead and have your background, either the entire session, your graduation theme background, or you can surprise us when we come back from graduation after a break to have that as your background. It's just a fun way for us to all celebrate the fact that we've made it through these 6 sessions, and we're moving on into further training and development as leaders. If you have had a mailing address change, please, if you're not sure whether we have the current mailing address for you, send me a quick email, let me know, or reply to the wraparound if you just want to confirm that we have the correct mailing address. The one that you gave us at registration is the one that we're going to be sending your certificate and also your class photo. And then finally, for the Duke Nonprofit Management Certificate, we'll tell you more about that in the final session, but there will be a form, a really quick and easy form that will allow you to express interest in applying for those 15 credit hours. And it'll be just a quick way for you to let us know, and then we can forward those names and contacts over to our contact at Duke Nonprofit Management Program to go ahead and send you that paperwork to sign off on electronically. So with that, I think we're good to go. You'll get that evaluation in the post-session wraparound, along with all the recording and the slides from today's session. Reminder that we'll probably be posting a poll up on our Facebook group. If you haven't joined that, please feel free to join that. We'll put a link in the wraparound for that one last time. And our next session will be next week on human resources and graduation. As Dr. Palmer said, we'll probably pick up on that slide 29 at the start of the session, just to wrap up fundraising, because I know it's a lot to cover, 2 topics in one session, but we hope that this is a good jumping off point for you all as you continue to raise all the funds that are needed to support your wonderful work. So thanks, everyone. Thanks to Tracy for joining us today. Thank you, Dr. Palmer. Thank you, Lisa. Thank you, Leslie, for helping in the background. Thank you, Jean, for listening in and contributing. We really appreciate all of our staff, and we will see you next week. Take care, everyone. Bye.
Hey, Rebecca.